Imagine walking into a poker game halfway through. You don't know who's bluffing, who's stacking chips, who's quietly bleeding money. But what if you had the record of every bet made so far, when it was made, how big it was, and how long players stayed in? That is what market profile gives traders. It's your X-ray vision into the market's structure, revealing where buyers and sellers are battling. In this video, I'm going to break down the context and how the market profile can help you with your trading competition. Market profile is a charting technique that organizes price and time data to reveal where the market is distributing value. So you have the value area high at 67 or 59.67, and then you have the value area low at 59.50. Okay, so this is the 70% of the value area for this trading day. Each TPO represents a unit of time a price was traded. Example, it's a 30-minute. So typically the TPO will be on a 30-minute. Some traders will use a 15-minute, but I would say stick to the 30-minute. These are stacked vertical to show the price acceptance and horizontally to show time spent at each level. The market profile isn't just about price. It's where the market value is. It's the battlefield where the professionals and the amateurs come and collide. It's really fascinating to look throughout the trading session. So the key takeaways here is that the market profile tells you where those important battles are happening. For example, like where are those larger nodes? Where is that time, like the point of control? Who's winning? And we can use, like, for example, a delta chart to aid us on that decision. And where they're fighting. Are they fighting above value? Are they fighting below value? So many key takeaways that we can take from just a simple glance at the market profile. How do you understand your competition through the market profile? We have short-term traders. So these are traders that are going to operate between the session high, session low, and they'll be trading just as, those scalp trades come and go. And even potentially sometimes looking at those day trades low. For example, taking a trade from the open and trying to hold that trade all the way through to the close. And then you have the intermediate participants. So these are the swing traders, institutions. They look for volume clusters and value areas. So they'll be looking for those very aggregated places where they know they can field slightly larger positions. And then you have the very long-term players like hedge funds, central banks. They care more about the fundamental value zones. They too will be present in here, but they will be caring more about like the data, the economic releases, and the big psychological levels to averaging their positions. Okay, so they don't really care about what happens within, let's say, the 45s or the 70s. They don't really care much about what happens within that trading session. They look more outside of that broadening spectrum. How do we identify those traders? So you have the point of control. That is where the most trading happen. It's called the fair value. So this is heavily defended by institutions. So, and you can see that when you look at a market profile, that value area, that's gonna have all of the majority of the trades. And you can then couple that with a volume profile or a delta profile, and then you can see who's really participating within that value area. And then you have the excess and or single. So, a lot of people will call this excess or single prints. And that is just simply like a one-sided trade with no follow through. okay? It reveals aggressive action by either weak hands, okay, by weak or strong hands as well, okay? So you can have a mix of both. I love single prints, and I think it's such a great way of seeing, like, for example, traders being trapped below a range, a way of seeing value being left behind, and the potential of a nice long or short trade. So market profile lets you see the footprints of your competition. Are they defending value? Are they testing those extremes, or are they getting trapped? And we can see that by looking at the market profile. Context is everything. Is the market balanced? In other words, an auction in equilibrium, or imbalance, a breakout mode. So for example, down here, we have a D-shaped profile on this day here. So the market this day opens inside previous day value. So value opens inside value and spends the day, as you can see here, with a move below, a move back above, another move back below, and another move back above, closing back within the fairest price from the previous day, which happens to be a P shape, so a bullish profile. The previous day from there was bullish, okay, lower, so this value is higher. We open within the range, and then again here, you have a D-shaped profile, so in a balance, okay? We can read that data just by simply looking at the market profile, so a balance here, okay? And then on this day, you then get a break away from that balance. You can see here by the singles, you can see that as soon we went back above that B session, we form singles. So this is price breaking out of that balance. So you go through from 906, one single, one single, one single, one single, one single, again and again until we get to the value of the previous day, and you break out of that balance to an imbalance, okay? So this again by simply looking at the market profile. Are we trading within value, the chop zone, or outside the value, the expansion? So here we were trading for a whole day inside that value, okay? And then the next day we looked below that value and quickly we snapped back inside and traded to the opposite extreme with a nice breakout. Okay, so it's the context clues that gives us, okay, what is really happening here? Who is really dominating? And then the other thing is, has the POC shifted? So throughout the day, when you're trading, you'll be able to follow the POC. So let me just select this and put the rate. There you go. So here's the trading day POC for this trading day. So you've got one single, then it goes to 2, 3, you got 4 prints there. You got 4, 6, 6, 7, but in the middle there you have 7. So that is kind of like where the fairest value is. Okay, there's quite a few 7 prints here. So you could class as the point of control being, you know, within a few ticks up here as well. So this is super important. So retail will tend to chase these breakouts. Okay, but then the professionals, they'll be looking at value. Remember from earlier, they'll be looking at value to make their decisions. They are more patient and they look at those traps to then go with that value. A TPO chart helps you align yourself with that smart money and not chase those weak hands. Okay, and I think this is the best time for me to show you a very, very clear example by doing a video explanation of this with a trade I took. You can see here that during the D session we had a breakdown. So you can see by the singles, okay? So as price is breaking down into the previous day session opens around the initial balance, you have a few things going on here. You have a market which is still bullish. You can see I'm marking value. So I'm looking at this and I'm saying, okay, we're getting a breakdown. However, where is value? We have spent all of this time up here. So value is clearly higher. We have higher value. We have a bullish market still, and we have a very excess break, yet with high volume, but unable to drop further. So at this point, we are taking a long trade because the risk is very limited. The risk would be literally just below that B session low, because coming back inside and through that initial balance equilibrium, I would say, becomes a little bit more bearish. So the odds, as I'm writing there, for this breakout to fail to the downside are really high, because what we have is that a market has been trading all day, all session above, inside the previous value. We have a bullish market. Value is higher. We have a weak break. We have that volume just being accumulated, yet price is going nowhere to the downside. We have now what it's called quite a lot of excess. We looked below, we fell, we came back inside. It also is the equilibrium for the previous day. You can see here by this yellow line. So you have a few things going on. The market on the higher time frame is bullish. Okay, value is higher. You can see here by the box. I've made this box here so that your eye is drawn straight to value. Where is value? Higher. The trade direction is the opposite side of value. Okay, so the value area high, which sits at 13. So what we do is we look at all of these components together and we identify by looking at the market profile that the weak hands were chasing this breakout to the downside. And what happens? They get slapped in the face. Price says, nope, I'm not going lower. I've hit a really good level. It's the previous day midpoint. Value from the previous day is still much, much higher at 13 still. You can see there the point of control. We've looked below. We caused some singles, meaning rejection. We've gone back inside. We take the long trade. Our risk is literally just below that low there, so minimal risk. And the odds to go back inside value increase, and they're very high. Therefore, we take that counter trade and we go with value. So value, again, super important. So this trade now, we've gone back inside the value area low, and it's at this point that you can start looking at different things like, what is the participation? What are the market participants doing now? Are they accepting the price inside? Because if so, then we can see that value rotation back to the upside. And how can we see this? On the right, I have the current 30-minute auction market profile volume, volume profile. And I can see that acceptance of prices. You can see that higher prices are bringing in all of these participants. Look at the volume they're growing, like 1,000 lots. 1,900 and growing. All the numbers growing, meaning, okay, I want to participate in this move. I have seen the look below. I've seen the failure. Value area low held. So let's try and push this back inside the previous day value. So again, you can see in these are me taking screenshots for my obviously journal, because this was a live trade at the time. So let's just monitor here what happens over the next few minutes. It's quite quick, so that you understand exactly how I look at the market profile to help me make my informed decision of who am I trading against, like who is like being trapped on here. And you can see me making annotations. This is live. Obviously, this is an example of a trade that I took live in the time, and it had to be a great example for this lesson, because this is one of those that once you see it, it will be there. And you will be looking at market profile slightly different, because you're going to be like, okay, how can I use this information to help me make my trading decisions? But in a bigger picture, like who am I competing against? And I think here it's clear, like you have such slow risk. The value is completely outside where we were trading down there. So it becomes like a no-brainer. You just have to take that trade, not think too much with that information, be very quick and collective. And there you go. So you have the singles. So you've got 1, 2, 3, 4, 5, 6 at the time of entering. And then now you've got 1, 2, 3, 4, 5, 6, 7. You've got another 7. So this is very unlikely to get that follow through. Okay. You don't really see many singles like this, especially when value is on the opposite direction. Not unless you have like a massive news event or a data. But during a normal trading day, it's going to be quite hard to find those. So now you can see that during this session, the point of control now here for this session is starting to build around that 905, okay? And you can see that price is trying to break through that 905 and it's having a little bit of a resistance. So let's keep watching, because we then after that we'll have the actual point of control for the day, okay, which sits around that 908, and there's already a couple of thousand lots there, 2,500 lots. So again, value was higher. Previous day value was higher. So we are opening this session and seeking lower to a previous day equilibrium, or the midpoint of the previous day, which happens to be at the initial balance, pretty much EQ, of the previous day session. This is typically a normal kind of place where traders like to align with the trend. So if it's a higher high and higher lows day, then on the next day you want to kind of like wait for at least the midpoint of the previous day. So you have all of that information, previous day midpoint, a lot of singles, trading outside value, move back quickly back to that EQ. It's a long trade, stop is below the low, and you trade with that direction of the value area high as being your target. Okay, so this trade is nearly about to finish, and you can see that we're going through now the second point of control. And each time when you're trading, you see one of these nodes forms and you claim it, you want to keep that direction, okay? And then you can just start slow and steady, moving that stop to break even. But typically you want to wait for that target because the trade has been obviously pre-planned there, okay? And there you go, just a couple more minutes to finish this up. We're back at the midpoint of the C session and through. You can see we opened D all the way at 910. So we on a 30-minute auction, you open D at 11s, between 10 and 11 there on that green letter. You looked all the way down. Look how long this range was. All the way down to the singles, okay, from the previous day, midpoint, and quickly back inside, leaving all of that value up here. So again, high odds of a failure to the downside. And we often see this on both ways of the market, upside and downside. And we're just about to come to the trade conclusion there. And that was only a couple of lots on the ES there. So we're trying to break through those 10s, as you can see, which is the open of the session. And while we're waiting here, so the yellow letter represents the midpoint of the previous, or the half back. The green represents the open of that 30-minute profile, and the red represents the close. Okay, so again, very simply to look at the market profile, knowing exactly what's happening with that. And there's me annotating for myself, you know, another successful trade based on reading the market profile and who's winning. And also just always keep an eye on time. You know that this auction, this 30-minute auction, only has 5 minutes left. So it's kind of like incredible to see that the whole auction did the whole trade. So in 30 minutes, we saw the whole trade come to fruition. And you can see me already gearing up, because we're coming to what? We're coming to the point of control of the previous day. We're coming to the open of the RTH session, and there you go, we're out of this trade, and that is where the market will probably see that little pullback again. And with that concludes how I use the market profile to see where value is. Super important, and understand who my competition is based on what we went through earlier. You have the day traders, the scalp traders, the long-term traders, institutions, banks, and, you know, like for example, banks don't really care much about, you know, like these prices in between. They'll be looking at the higher picture. Okay, so again, market profile and how the context helps us determine who are we up against. Market profile isn't just a chart, it's a map of intention and emotions. With it, you are able to decode the psychology of the crowd, spot big players, and more importantly, avoid being bait for smarter traders. master the context that you get out of the market profile, and you don't just react to the market. You are not going to be the trader chasing fake breakouts, okay? You are going to understand it. And with that, you are going to be calm and collected, looking for value and trading with value. If you like this video, please like and subscribe, and let me know down in the comments if you want me to break down a few more trades examples for you using the market profile, because I truly believe it's very highly beneficial to know and understand the context of who are your competition. And with that, thank you, and I will see you on the next one.